Stocks continue to roar higher. Can it continue, or is a pullback imminent? I think the answer to both of those questions can be yes. I am bullish into the end of this year. But at the same time, I believe a pullback would be quite healthy for the stock market. However, with that, valuations continue to look stretched. Gold is sitting at record levels, which could be a reason for concern. And inflation is starting to tick higher. But on the flip side, the Fed is also beginning its rate cutting cycle. So where do we invest from here? Are there stocks to invest in? And I believe there's always a stock to invest in, regardless of what's going on in the greater market. And hopefully today's video is going to help you, because I'm going to be going through 5 of the best stocks to invest in for the month of October. And before we dive into those, let me know, how are you doing so far in 2025? Let me know what your year-to-date performance is down in the comments section below. And while you're down there, hit that like button, as I truly appreciate it and it really helps with the growth of the channel. And with that being said, let's jump into it. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And when it comes to investing, over the years, I have used a number of different resources to analyze and value stocks. That was until I came across Fiscal AI, which is my one-stop shop for everything I'm looking at. Whether I want to look at the latest earnings report, whether I want to analyze a company's balance sheet, income statement, cash flow statement, or if I want to dive into a company's valuation to see if it's worth investing in right now. All of that is available at the one-stop shop known as Fiscal AI. Whether you want to read the latest earnings report or just have AI summarize it for you, Fiscal AI can do it. If you want to dive into a company's financials, both financial and non-financial data, Fiscal AI can do it. And it can all be put in an easy-to-read chart, something fully customizable for any stock you're looking at. The demand has been extremely high for Fiscal.ai, and at the same time, they continue to roll out new features. They will be going through a price hike at the beginning of October. However, anyone that signs up right now can lock in today's pricing. And on top of that, anyone that signs up for a pro plan will automatically be grandfathered in to their enterprise plan, which retails for nearly $200 a month, but you won't be paying anywhere near that. So make sure you check out Fiscal.ai today using my link down in the description below. All right, with that being said, let's jump into our 5 stocks for the month of October, beginning with stock number 1, which is going to be PayPal Holdings, stock ticker PYPL. And this is going to be our only carryover from our September video, as PayPal has kind of just floated in the mud, actually down a few percentage points. However, if you did in fact watch and follow along on our September picks, our top 2 picks, which were both Zscaler as well as Lockheed, did quite well, up over 9% and 7% respectively. And if I liked PayPal last month, I really like it this month, as it's even cheaper, just by a hair. When it comes to PayPal, they have a market cap of $64 billion. Over the past 12 months, shares are down 16%, and year-to-date, down 22%. Financials continues to be a sector that I'm bullish on moving into the end of the year and into next year, alongside that of technology. With lower interest rates and the economy holding together, it's definitely going to benefit the financial sector. Here's a look at how PayPal continues to be a popular platform, especially as e-commerce grows. Total payment volume has grown from $281.7 billion 10 years ago in 2015 to $1.7 trillion over the past 12 months. As you can see from this Fiscal AI chart I've created, revenue for the company continues to grow, but more importantly, they are being more efficient, as the operating margin has expanded from 15.8% 10 years ago to 18.2% today, the highest in the history of the company. In terms of valuation, this is where the stock gets very interesting. Right now, with where the markets are, cheap stocks are hard to come by. But let's check out PayPal, as they trade at a forward PE multiple of 12.5 times, well below their 5-year average of 26.9 times. This is a company growing its earnings by an average of 12% each of the next 2 years, putting the PEG ratio right around 1. They also traded an EV to EBITDA of just 8.4 times, again well below their 5-year average of 27.7 times. PayPal is the cheapest stock of all 5 we'll look at here today. And that leads us to stock number 2, which is going to be Amazon, stock ticker AMZN. And Amazon is one of my favorite positions to invest in. And every time that I've done a video pounding the table about buying shares of Amazon on the cheap, I've been correct. Those in my Discord community that have followed along, anytime we have pounded the table and told them I am buying Amazon, we have been correct and they have been handsomely rewarded. Well, here we are again. And if you're not yet part of my Discord community, I don't know what you're waiting for. Make sure you join. It's free to join, but we also have paid subscriptions if you want access to my entire portfolio, and you can check out that link below. But in terms of my newsletter as a whole, we have over 20,000 members that read it every single week. But getting back to Amazon, this is a company I talk a lot about. And the reasons I like the company are very similar to why I like Alphabet and why Alphabet is one of my largest positions. I love companies that are well diversified. When it comes to Amazon, they are one of the largest companies here on the US market today and in the world, with a market cap of $2.3 trillion. Over the past 12 months, shares are up 15%. However, year to date, down a little over 1%. Amazon has not only been the worst performing Mag 7 stock in 2025, it's the only Mag 7 stock that's actually in the red, albeit not by much. And very few times do you get real opportunities in some of these fantastic companies. Right now, you are getting another opportunity in Amazon. This stock is going to pay huge rewards, I believe, in my opinion, over the next few years in helping your portfolio build wealth. Looking at the financials, not really a surprise that revenues have skyrocketed over the past decade to $670 billion. But like PayPal, I love to see companies becoming more efficient at the same time. And with Amazon, operating margins are at an all-time high of 11.4% and growing. Taking a look here at this fiscal AI chart I put together, it's showing cash flow from operations in blue, free cash flow is in orange, and capital expenditures are in purple. The company is generating huge amounts of cash, but right now they're going through a huge CapEx cycle, a lot of that having to do with AI. But when that slows down and the payoff comes from it, this is a company that will have huge amounts of free cash flow. And in terms of valuation, the company currently trades at a forward PE of 31.8 times, well below their short-term historical average of 38.9 times. EV to EBITDA, though, is where this stock gets real cheap. And right now, they traded an EV to EBITDA multiple of 17.5 times, again, well below their average of 25.1. And this is one of the cheapest you will have ever been able to buy this stock based on this one metric. Amazon is giving us another opportunity because I truly believe that this is a stock in the very near term that will have a 3 handle in front of it sooner rather than later. And that's going to bring us to stock number 3, which is going to be NVIDIA, stock ticker NVDA. So we're going from one Mag 7 stock to the top of the Mag 7 poll, which is going to be NVIDIA, the most valuable company on the US market today, and really in the world. And when it comes to NVIDIA, unlike Amazon, this is a Mag 7 company that hasn't been struggling. As you can see from this chart, Amazon is the worst performer, and the rest are clogged near the top. NVIDIA is the second best performer, trailing only Alphabet so far in 2025, which that's a stock that's been on a tear of late and happens to be my largest individual stock holding. But when it comes back to NVIDIA, the market cap is currently sitting at $4.3 trillion, making it the largest company in the US by market cap. Over the past 12 months, shares are up 43%, and year to date, up nearly 30%. There are a lot of reasons to continue to like NVIDIA moving forward, even with the growth we have already seen in the past. As we've seen with the hyperscalers, they continue to spend huge amounts of money on AI, and a lot of those dollars are going towards NVIDIA chips. After all, NVIDIA has the fastest and most powerful chips, but outside of chips, they continue to grow in areas like automotive. They continue to grow in data centers, and they continue to grow in robotics. They have a great management team that continues to innovate a lot of things that check a lot of boxes for great investments for your portfolio. Looking at this fiscal AI chart I put together, we can see that not only have we seen huge revenue growth in the green, but the blue chart represents the company's growth in free cash flow over the past 5 years. This is a company that's become a cash printing machine. In terms of valuation, shares trade at a forward PE multiple of 31.1 times, well below their average of 38.7 times the past few years. They traded an EV to EBITDA of 43.4, again, well below their historical average of 61.7. AI spending continues to creep higher and doesn't show any signs of slowing. And that's going to bring us to stock number 4, which is going to be Vistra Corp, stock ticker VST. So we're moving over to the utility sector, but we're still sticking with this AI theme. A lot of these companies out there are building huge LLM, new data centers, and all of this leads back to a need for power. That's where Vistra comes in. The company currently has a market cap of $68 billion, and over the past 12 months, shares are up 82%, and this year alone, up nearly 40%. As I mentioned, all of these new LLMs, all of this AI spending, robotics, cloud, all of it leads back to a need for more power. And the traditional grid isn't just going to be able to keep up. There's other areas. So although Vistra is a utility play, they have traditional, but they're also a play on nuclear, which is an area that's going to continue to grow, especially under the current administration. So in this fiscal AI chart I created, and hopefully you folks are getting a good understanding of just how powerful and useful fiscal AI can be for you. So make sure you sign up with that link before the price hike. But with this chart, you can see revenues in green, and then the blue line represents the year-over-year growth, which is at 31.6% the past 12 months. And the orange line represents the operating margin, which currently sits at nearly 20%. In terms of valuation, the stock trades at a forward PE multiple of 25.1 times. Earnings growth, on average, over the next 2 years will be around 24%, giving the stock a PEG ratio sitting right around 1, making this stock investment that much more intriguing. From an EV to EBITDA perspective, shares currently trade at 13.6 times. AI spending is going to continue to be a long-term tailwind for the likes of Vistra because it just means that much more of a power need moving forward, which falls right into their lap. And this also happens to be the newest position within my actual portfolio. And again, if you want to track all of my portfolios, get a trade alert anytime I buy or sell a particular stock, make sure you're an Edge Plus member. And you can again check that link out in the description below. And now we're going to move on to stock number 5, which is going to be Phillips 66, stock ticker PSX. So now we're moving in to the energy sector. We're taking a step away now from AI to a degree. And for much of 2025, energy hasn't been performing all that well. It's been towards the lower half of the S&P 500 sector performance. But if you haven't been paying attention over the past month, energy is a top 3 performing sector. As you can see here, we're taking a peek at sector performance over the past month. And at the top of it, communication services, which has largely been led by Alphabet. Also, technology, to no surprise, continues to be great, driven by big tech. But look at third. And really, with the energy sector up, we've had a big surge in oil and gas in particular, moving higher, which has led to energy now being the 3rd best performing sector in the past month. One of the oil and gas specific ETFs I like to track and invest in from time to time is IEO. And when you look at that, just over the past month alone, the ETF is up nearly 5.5%. But when it comes to Phillips 66, which is part of that IEO ETF I just mentioned, they currently have a market cap of $55 billion. Over the past 12 months, shares are up 7%, and year to date, up 22%. A lot of earnings potential, especially when you're looking at oil and gas specific type companies like a Phillips 66. A lot of it is predicated on the price of crude oil. Higher prices equate to higher earnings. However, oil prices have been stuck in a rut in the low to mid $60 range for much of 2025, but looking as if it may be basing and could be due for a rise into the high $60 range, which even that small of an amount makes a big impact on these oil and gas companies in terms of earnings. In terms of valuation, the stock currently trades at a forward PE of 15.3 times. But again, a lot of earnings growth will be predicated on the price of oil. So there we just looked at 5 very different companies, a group of them in some shape or form connected to that of AI. But again, 5 very different companies. There should be something for every type of investor here. Again, down in the comment section, let me know which of these 5 stocks do you believe is the best buy at current prices and current valuation. And if you haven't done so yet, please show your appreciation if you found any value in this video by just simply clicking that like button down below. I truly appreciate it, and it really helps with the growth of this channel. Thanks again for watching, and we'll see you in the next one. Take care.